Right now, somewhere in America, $1 trillion is being quietly moved, not by the government, not by banks, but by tech giants betting everything on one single technology: artificial intelligence. And here's the brutal question nobody wants to answer. Is this making you richer or slowly making you obsolete? Let's talk about a number that should shock you. $1 trillion. That is how much money is being poured into AI infrastructure every single year. Data centers, chips, servers, power plants just to run AI. Companies like Microsoft, Google, Meta, and Amazon are spending hundreds of billions, not millions, billions, just to build the backbone of artificial intelligence. This is the single biggest investment wave since the internet itself was born. You've heard of the Magnificent Seven: Apple, Nvidia, Microsoft, Google, Meta, Amazon, Tesla. These 7 companies alone control more stock market value than the entire GDP of most countries. And right now, they are in an all-out spending war. Meta alone announced over $60 billion in AI CapEx for 2025. Microsoft? Over $80 billion. And this is just the beginning. Analysts at Morgan Stanley say nearly $3 trillion of AI infrastructure will flow through the global economy by 2028, and more than 80% of that spending hasn't even happened yet. But here's where it gets dangerous. America is not alone in this race. China is right behind, and in some areas, it is already caught up. A 2026 Stanford AI Index just revealed that China has now erased the AI performance gap with the United States. While America leads in chips and capital, China dominates in patents, publications, and physical robotics. This is not just a tech competition. This is a geopolitical war, and the stock market is the battlefield. Now here's what the headlines don't tell you. All this spending? It's creating a dangerous bubble. Valuations in AI-linked stocks are reaching levels not seen since the dot-com crash of 2000. Price-to-sales ratios are near tech bubble territory. And here's the chilling part. Nobody actually knows if this spending will generate a real return. Morningstar put it bluntly. The key uncertainty is whether this trillion-dollar investment will ever pay off. And that uncertainty? It falls directly on you, the investor. Let's say you bought Nvidia stock 2 years ago. You'd be up over 600%. But if you bought at the peak, you'd be watching it drop 30% in a single week on news from a Chinese AI startup called DeepSeek. This is what happens when markets are driven by emotion, not fundamentals. Retail investors, everyday people like you, are now responsible for 30% of all daily US stock market volume. That means when the AI hype machine moves, millions of regular Americans get swept up in the wave, rich or broke depending on the timing. And it's not just your portfolio at risk, it's your career. AI is moving from a tool that assists workers to systems that can autonomously run entire company workflows. Early adopters report massive cost reductions, which sounds great for companies, but means fewer jobs needed. Right now, 73% of AI experts are optimistic about AI's impact on jobs, but only 23% of the general public agrees. That gap between what experts believe and what real people feel? That is the real crisis hiding inside the AI boom. So who is actually winning? Here is the uncomfortable truth. The people getting rich from the AI boom are not the ones using AI. They are the ones who own the infrastructure. Nvidia shareholders, data center REITs, energy companies powering AI servers, copper and electricity suppliers. While millions of people download ChatGPT for free, a small group of investors is collecting billions. The AI revolution is real, but the wealth from it? It is flowing upward, fast. So what does the smart money do right now? Number 1, stop chasing hype. The biggest AI stock gains have already happened for early buyers. Number 2, look at the infrastructure play. Energy, data centers, and semiconductor supply chains are where the next wave of wealth is being built. Number 3, protect your career. Learn one AI skill that makes you harder to replace, not easier to automate. And number 4, stay diversified. Because when this bubble eventually corrects, and all bubbles do correct, The people with diversified portfolios will survive. The ones who bet everything on one AI stock? They won't. The $1 trillion AI bet is already placed. The chips are on the table, and the game is moving whether you're ready or not. The question was never really, is AI making you rich or poor? The real question is, are you paying attention? Because in this market, ignorance is not just expensive, it is devastating. If you found this video valuable, subscribe, because the next video will show you exactly which AI stocks Wall Street is quietly buying right now. See you there.